Hello, Dumelang Sanbonani. Welcome to my channel, Wallet Boza, where we talk things that affect your wallet. Today, we're going to talk about building or maintaining a credit health score. So, I will take you through some of the most important steps of the things that affect your credit score. Let's jump to it. So, this is an example of how levels of credit score look like. So, you can see from the lowest, the very poor one, where it's 550. These are the numbers that they use in terms of measuring your credit score. So you can see it starts from 500 all the way to 700. So if you are below the 550, that means you don't have a good credit score. So today we're going to talk about the things that affect your credit score. Before we jump into those things that affect your credit score, who uses the credit score? And why is it so important to build or maintain a credit score? So normally it's the lenders, people that will be borrowing you money. Those are the people that uses your credit score. So it helps them to understand if you're able to repay the money if they were to borrow you that money. So in general, if you have a lower credit score, it tells the lenders that you have high risk of defaulting in your payments. So it can be your credit cards, your loans, and also your credit score helps you to get better interest rates and other services. So let's jump into one of the things that affect your credit score, which is your payment history. So this is for people who already had a credit score. For those ones who are still new or who haven't took any form of credit, you won't have what we call payment history. So a payment history, this is where they record all your transactions. Let's say you had a credit card. So this is all the transactions that you have done in that credit card. It can be a loan, it can be a vehicle or a bond that you have purchased. So this is all those records. That record shows how you behave in terms of payments, how you utilize those credits. So this is one of the steps that the lenders look into. They look into your credit history. They want to see whenever you get a form of credit, how do you behave in terms of paying back the money? Are you this person who always on track in terms of making your payments? Because if you default in your payments, that will affect your credit score. So it reduces your credit score. That means if you continue defaulting on your payments, let's say you have a vehicle finance, you bought a car on credit. If you don't make your payments on time, it sends a signal to the lenders that either you're struggling financially and also affect your credit score. So it's very important whenever you have your credit score to make sure that you manage your payments. Make every payment on time. If you foresee any challenges, you have to speak to your financial institutions that are providing you with the funds in advance so that you can arrange alternative ways of how you can pay them back. We're going to move to the second one, the credit utilization. So, for example, let's say you have a credit card. So your credit card is for, like, let's say for illustration purposes, the total credit limit is 10,000. So credit utilization, it's where you compare the total credit limit you have to the amount that you have already used. So if you are relying too much on the credit, it sends also a signal to the lenders that you're relying on credit. So when you use too much of credit, it also affects your credit score. So you have to have a good balance in terms of how you utilize your credits. So don't use this. Simple tells you that you should use credit on the things that are necessary, things that you really need. You can't be using credit cards to go for your entertainments, because it puts you on a tight budget. So you need to make sure that whatever you're using your credit for, it puts you in a better position whenever you need. Let's say you want to buy a car in future, or you want to buy a house. So it puts you in a good position where when you looking for a debt, it will be easier for you to get those loans when you need them. So it's very important that if you have, let's say for a credit card, you have used most of your credit limit, what you can do, you can apply to increase your credit limit. That's another way of decreasing your utilization. So make sure that when it comes to this, let's say you have different types of credits that you have. You have a loan, a credit card, a vehicle financing. So make sure that all those credit cards, try by all means necessary to pay them on time, and also make sure that your payments are on time. So we're gonna move to another factor they look into when they provide you. They think they're in a process of providing you with a credit facility. Another one is length of credit history. So if you are new into credit, you won't have any history in terms of your credit. So if you are new and you're trying to build it, that's where you can maybe get you can open a clothing account. That will also help you to build a credit history. And make sure that when you open those credit that you decide to go for, make sure that you adhere to the payments. Make sure that you make all your payments on time, because the moment you start defaulting or not making your payments on time, that will affect your credit score. So how do you improve your credit history? You can open a small credit card if you knew. That's another way of improving it. And make sure that you don't close those accounts, because the moment you close the account, you will have to start from scratch. So you have to keep that account open. As I've mentioned in the prior factor, make sure that you make your payments on time. That's very important, because the moment you start not making the payments on time, it impacts your credit score negatively. Sometimes you find it can stay on your credit history for quite some time, up until you prove yourself that you can able to make those payments. So it's very, very, very vital for you to make all your payments on time. So we'll move to another factor that also affect your credit score. That's types of credit that you will obtain. There's so many different types of credit that you can get out there. You can have your credit card, your overdrafts, revolving credit facilities, the term loans. So all these types of credits, they are different. So it's very important you understand what kind of credit are you getting, because all of them have different charges that comes with. For example, if you were to compare a credit card and a bond, normally a credit card will be more expensive, because most of the credit cards, your overdrafts are unsecured. So there's no collateral that you provide to the lenders. So this one, they tend to be very expensive. So let's say you want to buy a car. It will be most ideally for you to go for a vehicle financing, because mostly in most cases, the vehicle financing is cheaper than a credit card or an overdraft. So when it comes to planning types of credits, you have to understand the type of costs that are associated with these accounts. Because if you don't understand this, it will affect you negatively. Because you end up having so many facilities, and if you can't make the payments, that will have a negative impact on your credit score. So understand before you get yourself into any form of credit, make sure that you understand it. It can be your overdraft, your revolving facilities, vehicle financing. Those are very important to understand, because you don't want to be in a position where you have so many debts that you don't really need, or that are not really serving the purpose that it's intended for. So it's very important you understand what you're getting yourself into, because also the term of those type of credits are different. A loan, you will find a loan, it's for like, normally it's for 5 to 7 years. A bond can be longer. It can go up to 30 years, depending on which option you choose. But normally a bond is the longest one. Credit cards are shorter in most cases. That means you need to make the payments tend to be higher. So let's move to another factor where when creditors are looking into providing you a credit, it's the new credit inquiries. So what it means is that every time you apply for, let's say, a credit card, that's a credit inquiry. It sends, so it goes under your records. Or so let's say you apply in 1 month, you apply for a loan, you apply for a credit card, you apply for vehicle financing. All of those ones are credit inquiries. So what is very important when it comes to credit inquiries, make sure that you don't do so many credit inquiries, because the moment you start doing that, it sends a signal to the lenders that either there's something happening in your life, so that means you're depending more on credit. It also impacts your credit score negatively. Always make sure that you apply for those credit facilities you need. Don't apply for the sake of applying, because it has a negative repercussion on your credit score. So if you can follow all of these factors that we have discussed, you are on your way on maintaining a healthy credit score. This will help you whenever you need, let's say you want to buy a house, you get favorable rates. That means if you get a favorable rate, you will have lower payments that you'll be paying. Also, when you buy a car, you'll be paying lesser interest rates. So it's very, very important that you maintain this. I'll drop a link of some of the companies that can help you. You can register your profile there. They will help you to track your credit score. What I know, most banks, they do have an application in their applications where they track your credit score. So you can put your information there. They will help you to monitor your credit score. It's very important that you, whenever you're doing your transactions, you adhere to their credit policies, because it will save you from an expensive interest rates. Thank you for tuning in my channel.